what matters is not just the level of rates, but how long they persist. And obviously, we've had this mantra in the last few months of rates staying higher for longer. And I think a year ago we kind of invented the phrase that it was going to be more like the Table Mountain than the Matterhorn. And the reason that economies still seem to be relatively resilient to the rate rises we've had is because a lot of companies and people locked in the low rates, and so there's a delayed impact of what we've already had. The consequence of that is if the central banks carry on tightening until the economy seems to have fully responded, effectively we'll be heading into a deep recession, which is why I think they've stopped. They've paused at a level where rates are 1 or 2% positive in real terms after a decade when we had zero rates. And so I think there's more tightening to come from the tightening we've already had.
Andrew, we've certainly got more ammunition now for the central banks, something we haven't had over the past decade, as we've talked about what central banks can do if they need to stimulate. So they've got a lot pent up there if they need to cut, and cut aggressively if that happens. But as you talk about some catch-up here, lag effect, when do you think that's going to be felt? Because we've just seen over the course of Black Friday and into Cyber Monday today that the consumer is still willing to spend at this point, even if they're subtly changing some of their behaviours.
Yeah, I think it sort of slightly fits and starts. We're not in a consumer boom because we have had some signs over the summer that, particularly at the luxury end, some spending has been softening a little bit, but there's still quite a lot of retained savings from the pandemic era. And what's missing, particularly outside the US, where the consumer's been chugging along okay, what's missing is confidence. And we've had some data over the last couple of months which are kind of verging towards creating a bit of a Goldilocks move, as in inflation's been coming a little bit better than expected in most places. Demand has been kind of softening in the US, where you want it to soften, and appears to be bottoming out in the UK and Europe. Now, it's maybe Goldilocks porridge with salt rather than porridge with sugar, but it's a better environment than we thought we were going to face at the beginning of the year, or even a couple of months ago when there was that big bond sell-off and fears of recession.